Hey everybody, this is John and welcome to the free video. Let's start off talking about Tesla because we did kind of load the boat on that one. You had the breakout here, the test of the snow line, and this of course coincided with the announcement into the inclusion of the S&P 500. We started picking up positions and adding to it, and we're still holding on. And so the question is, what do we do from here? At this point, these are the trades that we took in our trading room, and it's turned into probably I think it's the second biggest trade of the year for me. And the question is how much longer do we hold on to this, or how do we manage it? And for something like this, because it can always be worrisome. It's like, oh my gosh, what happens if this thing stalls? I don't want to get back profits. But if we look at the 30-minute chart and we just look at the moving averages, the idea here is a strong stock will stay above its 21-period moving average on the 30-minute chart if the momentum is still going. And for a trade like this, our goal is to stay in as long as the momentum is there. It's weird because sometimes you get into a trade and it's up and it comes all the way back and stops you out, and so it trains us to like, oh my gosh, I got a little bit of a profit here, I guess I should take it before the market takes it away from me. But you want to be able to recognize those situations where it's like, man, you got these three things coming together. You've got typically it's like a momentum stock, a high beta stock, which Tesla obviously meets that criteria. As a bonus, is there short interest? Yes, there is on Tesla. It's the hedge funds hate it. Is there a special event coming up? Yes, in this case, inclusion to the S&P 500, and then from there, is there volume behind the move? And then when you get those categories together, then it's just like, all right, well, and especially if it's making new highs, it's just like, well, let's just hold on to this thing as far as it can go and kind of scale out as we go. So for something like this, I don't know exactly where it's going to go. 600 is a nice round number that we get there maybe next week. And then if we do fall back as we scale out, then if we get a close below that 30-minute 21, certainly a good place to close it out and look for a new opportunity to get in and roll the deltas. Now our deltas are 100, so let's go back and find some lower deltas. Anyway, that's what's going on there. And then keep in mind too that of course the markets, for those of you not in the U.S., the markets will be closed on Thursday in the U.S. for Thanksgiving, and then reopen on Friday for a shortened day. So not anticipating too much on Friday. You can get some good moves simply because there's no volume, and so the markets can be moved around, i.e. manipulated, and that certainly happens. And then the other thing I'm kind of trying to keep an eye on here and see how it plays out is Bitcoin. Bitcoin has certainly come up pretty far. It's starting to pull back a little bit, and you're really seeing that more in GBTC, which got away from itself. Typically, it typically trades about 10% above Bitcoin, and at one point it was trading like, 30% above Bitcoin, or however much that was, but it's a little insane. So it's kind of coming back down to earth here. If that's something that you're trading, keep in mind that Bitcoin isn't necessarily falling this much. It's just that the premium is coming back. The spread's coming back between GBTC and Bitcoin. So I would buy it if it could come back to the 21. All right, that's what we got. You guys enjoy Thursday and the shortened Friday and then the weekend, and get rested and relaxed for what should probably be a very eventful December. All right, have a good one, and we'll see you on the other side of November.